Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is Wednesday. We got CPI today. I'm a little bit late on getting the stream started for some reason. US CPI month over month in line with expectations, spot 3 versus the expected spot 3, and core CPI month over month also in line at spot 3 versus the expected spot 3. We saw a pretty decent initial jump in the treasuries in particular, but I would say across all of the markets, the S&P 500 also up. The the treasuries have retraced a pretty decent amount of that, so that's a little bit surprising to me. I think that, in this situation with it being in line, there was going to be a lot of people that were hedging for this short. Not that they thought that that's what was going to happen, but that they just have to protect themselves from the downside. I don't know if all of those orders are out, like the actual net change in cumulative delta is not that big. So in this situation, well, okay, what else do we have to consider here? There is a 10-year note auction today as well. So the flows that I would be expecting here today would be gentle meta order long and really big icebergs along the way. Maybe I can now the real question is, like, how do I get an optimal entry in here? Well, I'm gonna say anything below 30. I'll look at, so I'm gonna put those in sim trades to see how, kind of track my own predictions, etc. I don't necessarily like taking trades in the immediate aftermath after this, but that's what I can see, and if scenario plays out, you're gonna miss it. So put that in there, and then let's come and take a look at some of the charts here. So here in ZN, you can see we had a down day yesterday. A little bit of downside in the overnight, but nothing too crazy. We're now pushing up. We've gotten above this 111.01-ish area that we were having trouble with yesterday. Can we get to yesterday's overnight highs at 09, or maybe even the weekly highs at 20.5? I think that those are certainly realistic possibilities, but we'll have to see how much volume actually comes through. We are seeing a little bit of upside, so my my long here, I didn't get filled on these other contracts. Did I only take one contract? Oh well, we're just gonna hold it. Came by to say hi, came back from Thailand. Oh yes, that's very good. It's it was kind of really interesting the way that is playing out right now, because the guy is still president and they're like discussing that the Korean president will step down at a predetermined time when they can, like, run elections and things like that. It's just, and the guy was just kind of like, oh, I'm sorry, like, trying to play it off like, just kidding. The whole thing is just weird. Anyways, charts. S&P 500. Yeah, they were down again pretty big yesterday, but this move is recovering a lot of that. So let's see where they end up today. Oil kind of on the upside, so they might be pushing to the kind of the wider end of this range in like the 70, 50-ish area. Gold and silver, another big move up there. So that looks good. If we could get back up into like the October highs, man, that would really start to look amazing, especially in silver. Kappa. Capra's looking okay, actually. I mean, look, we still got to recover for 440, but there's some gentle uptrend on that. The Japanese yen is looking to struggle a little bit harder in the overnight. Dollar still around 106.5 though. And Bitcoin not quite back to 100,000. So there was another bit of a downside move yesterday, but they seem to have recovered that so far. The president said that he's going to get impeached, but he's not stepping out by himself. Really? Okay, so that's a new piece of information from what I was reading yesterday. I just can't imagine in that situation wanting to cling to power, but you know what? Some people just want power for power's sake, you know? I saw this you know, it was something that I knew, but it had never been put in that perspective, and it really shifted my view on some things. But it was basically this neuroscientist on TikTok. And she often talks about, I think it shows her to me because she has talked about things like ADHD and autism in the past. I have an autistic son from ADHD. But she was saying that, like, we kind of have mislabeled dopamine to some extent. Like, we all think of dopamine as like the pleasure chemical, and like there is an element of that, and there's an element in dopamine release in novelty, but dopamine is actually kind of more like a wanting chemical. Like, dopamine is released when you want something, and you want to make that feeling go away, so it encourages you to do things to make that feeling go away, essentially. And so she talked about how, you know, a lot of people in our society now, you're stuck in this constant perpetual cycle of just wanting, right? And I kind of realized, like, oh, well, because I'm ADHD and my dopamine is a little bit messed up, that's why I don't do those things. And when I found something that I could hyper focus on and really generated the dopamine, like wanting after a certain girl or something like that, has kind of turned out badly for me, and so I very much avoid that feeling, you know? And I wonder how much of that is involved in people who pursue power. You know? Like is it that they need the dopamine and they want it, and that causes them to want the power, and that's why some people end up doing such reckless things. Same in trading. Like, man, I've seen people do like really dumb things and blown tens of thousands, if not hundreds of thousands of dollars in trading, and I'm always like, how can people do that? I don't understand it. But now I realize, oh, I don't understand it because my relationship with dopamine is different. Maybe there are some things that I do need to pine after just to motivate me, just to get me to take the big risks. You know what I mean? President just called June, the guy who was the biggest dictator in Korea, a good politician. And well, so I don't know too much about that guy, but like, if that was Donald Trump, if Donald Trump had said that, because Donald Trump has said things that seemed like he was giving glowing reviews of dictators in certain instances. Like he says stuff about Putin, and everybody's like, why is he praising Putin? I think that Donald Trump is working off of this heuristic that you need to be strong, and that talking about other strong people and praising other strong people makes you look strong too. And not necessarily that he wants to be a dictator. But I'm not a mind reader, so I don't actually know that that's what he's thinking. I wonder if that's what the Korean president is thinking. We needed 200 out of 300 to vote yes for impeachment to pass the parliament, but 105 people from the Republican Party left parliament and are just not voting. Oh, really? So impeachment kind of failed then. Well, you know what? Like, okay, like having a president and a parliament that are like at each other's throats and everything is not necessarily a bad thing, right? Maybe that balance of power can just kind of hold until they have a chance for another election. I don't know. It doesn't look like I'm going to get filled on a second contract at 30. I am still kind of interested in the second contract, but I don't know if I'm going to get it. I still really feel like I really want it in like a good spot, you know? Let's not take the immediate fill on that one. I may yet add one, but let's just kind of let this one cook a little bit. Octavia says hold. Yeah, I'm not gonna take the profits on my trade. I really I mean, I've got enough on this as a runner, especially if we go and touch the new high. I could probably just let this one contract ride. I'm just a little bit like, oh, the yen smashed. Oh yeah, yen is moving here. Sure. Yen has a lot of ground to gain from the decline overnight as well. So is the won still low? Oh, let's go and look at trading view. I don't have the best view into that, but we were able to see that, weren't we? Korean won. It wasn't on the maybe you do it this way. Oh, there's Korean won futures. Oh wait, how come that didn't show up before? Okay, well, but the data that you get isn't very good. There's not very many transactions. It looks like it is still low. That's not what I wanted to do. Here's the one on ice. Back out to like 30-minute ones. So this is backwards. This is the dollar. Oh, actually, can I get it the other way? ARWUSD. Like that. That's probably better. There you go. Okay, so there is the low from the day when all of the crazy happened. And we're still relatively low. They're kind of lining up for it. They're still a few ticks away, but it is kind of looking to me like it's going to go higher. Again, it's unfortunate I wasn't able to put enough size on, but I guess a win is a win. Okay, so a little bit of iceberging right there at the top, I think should be expected. See how quickly that bid at 03 halves firms up. That's not too bad. And they're kind of pulling at 04, so we could see a slip there. I don't know. We'll see how this plays out. The 5 years kind of pulled back a little bit too much, though. All right, they might not be ready to. You might have to sit here for a little bit. SK, I don't know what that is. Kind of went up. Okay. It is kind of curious. I would have thought that the won would have recovered more than it has, for sure. Ah, that's right. I have a dentist appointment after the stream. I guess I should probably leave a little bit early to make sure I get to the dentist on time. I feel like that whenever I really, really wanted to like break a high and stop run and all that sort of stuff really badly, it doesn't happen. And then when I'm like, maybe it'll happen, but I'm not going to hold my breath, and then that's when it does happen. Does also really look to me like as Octavius was pointing out earlier, like the yen was really moving, and that is kind of like major part of the impetus that moved us up, and it has paused for the moment, so we might be paused until the yen decides to do something again, and who knows, that the yen could decide to retrace. We might retrace. We'll see what the dollar does. So the dollar is weakening here. I am a little bit concerned about, there might be a limitation on how much the dollar could weaken in this situation. Uh-oh, the Guardian says the Lord of the Rings, the War of Rohirrim review redundant, flavorless animation. Oh, but that the animation was like the part that I was the most excited about. Oh dear. Is it that bad? Why the Feds need to keep interest rates higher for longer. The Economist. Okay. Might be worth reading. I've kind of been stuck. I feel like in some cases here on the stream, I've contradicted like past versions of myself, because on one hand, I'm like, we really need lower interest rates like right now, or we might have a recession. But then at the same time, I am like concerned about that they might not have a lot of room to lower rates very much. The guy who led the martial army said he's sorry and just followed the president's orders, making himself not guilty and the president as a weirdo. I do kind of question, like going in and like trying to prevent Parliament from meeting. That seems like an illegal order that the military should refuse, you know? Like in the US, I think that military would refuse to do that. But I guess it was also kind of weird to me that it was like, okay, when you declare martial law, there's no political activity allowed. That doesn't make sense. Okay, well, $111 isn't terrible. This fallback down is not accompanied by any real volume in any of the treasuries, but the Japanese yen is pulling back. So this appears to me to be currency driven. He did martial law because of his lack. Oh my. Do Koreans have this strange cultural relationship with luck like the Chinese do? Like where the Chinese think that like invoking certain numbers and colors and stuff will make you more lucky. I've always been of the opinion that being superstitious is bad luck. Okay, there does appear to be a hole at 111 when we come back to it. There was kind of maybe a little bit of a hole there before, so. And I guess the concern here on this one is that the rise up to the highs may not have been driven by a real meta order. It may have been the correlation and, you know, speculators trying to jump on the trend. CEOs and TOs are obsessed with AI. You know, I was thinking about this morning. Maybe one of the reasons why I was like slow to get ready and wasn't here early enough is like, it seems to me that artificial intelligence, I'm not saying that like artificial intelligence is going to replace all humans. I think that there's always going to be a place for humans. Even if it's like, you know, we just make it for people, you know? It's like, well, yeah, we probably could have a robot do this, but people need jobs and people want to do this, and so we have humans do it instead. I'm not saying that you're going to get to a point that robots replace all humans. But it does seem to me that the change in AI that we've had here does allow artificial intelligence to digitize intuition and do jobs that it previously couldn't do. So, like, what is the actual extent of that? And what are the extremes of that? What if we did get to the point where AI just completely took over like the whole markets? Like there's no humans trading anymore. It's all robots. What would you have at that point? Well, I think that what you would have left at that point is the structure of the market. Like what would the robots be trading on if it's not the collective emotions of people? If there's no people involved in it anymore, then they have to trade on one, the decisions that humans are making. Whoa, holy crap. Dude, that was 15,000 contracts just came through there all at once. Remember yesterday somebody was asking about sweeps? That was a sweep in the treasuries. You do not see that very often. That was bonkers. And the Japanese yen slipped back up there very quickly as well. But there was some massive delta on that, man. Wow. That's probably not super interesting to the average person, but I kind of want to clip that one and just save it because you don't see a spike like that very often. Was there news? I'm not hearing anything on the news squawk. That was the sort of a move that I would expect to see if some sort of really big risk headline came through. Well, I'm not seeing anything. The most recent stuff that I see here, Nick Timmeros 11 minutes ago, falling prices, deflation of core goods over the last 18 months helped deliver a decent chunk of the disinflation we've seen. That has now ended with higher car prices pushing up core goods spot 3% on the month. You could search Jan Sikiol in Google. Today's probably not the day to do it. I don't know. You know what I did? Well, I'll pull it up. Yesterday we were working on did not save it. No, this is a different one. I think. Anyways, I was working on yeah, it was. There must be a problem with it. There's probably some things in the properties that I need to sort out. But I did get my fair value gap indicator to work. It was actually when I did it, did all of the filtering. It was actually worked way better than I thought it would. I was kind of like, can I do this thing where like, I filter, I have all of the gaps in some collection, and then I can query down on only the gaps that are visible, and then only draw the gaps that are visible. Well, yes, I can. And it worked really, really well. Now, there's some problems with it. So, in that shot that you can see right there, let's make it a little bit smaller so that it's only covering up the yields. So, like, how many fair value gaps are in there? You can count them, right? Well, in order to like verify things, I made it output how many there are. So in that shot, there are 59 fair value gaps. Can you believe that? Can you believe that? 59 of them? Okay, so that explains why in some of the indicators of this that were on TradingView, that they all seem to have some degree of like well, maybe you only count it as a fair value gap if it's, larger than a certain amount of the volatility or things like that. I think I wanted to add that into the indicator. It shouldn't be hard, but we would have to come to an agreement about what that filter should be. Yeah, but I think that the filter would have to be the size of the gap, right? Like right now, I have a filter that says, okay, the gap has to be larger than a certain number of ticks, right? But if you want it to be able to like adjust to the market conditions and things like that, you might have to be able to say, okay, I want to be able to do it on an ATR on the same data series, or maybe you do it on a daily ATR. I kind of find like daily ATR things tend to work better, but I don't know. You just kind of have to test it out. But like that'd be the whole problem, is that like each individual would want to filter it a different way. And, do you program them all, or like how much flexibility do you give it, right? And we're not necessarily the primary audience for this. We don't necessarily use it. But what I'm realizing now is that the fair value gap and like within the context of, price action traders using it, that it's really like a selection bias thing. Like there is always a fair value gap somewhere around there. In the S&P 500, there is always a fair value gap somewhere nearby that you can blame things on. Like always. So like the silver bullet strategy, that one gets kind of interesting because it has to form a new low, pull back, then form a fair value gap, and you come back and close that fair value gap. And so you're looking for like a very specific one. But like it almost always happens. Yeah, there is always a fair value gap. Makes more sense than some of the other things I've seen about them. Yeah. Well, and they've always, it also makes some of the discussion I've seen around it make a little bit more sense, because a lot of people are like, well, not every fair value gap matters, of course. Well, now when you realize how often they occur, then that really makes sense why they're saying that, right? So I was kind of hoping with this that, we would put it up, and once we put it up, we would get some clear ideas for like what to do with it from here. Like what are some things that we can add to it, and some things that we can stick into the backtesting for it that would really make it useful to people. But that they are so incredibly common, I think really, really like dampens my enthusiasm for it. I don't know. Maybe some of you guys still see something or want something added into it. Maybe there's a different indicator that we could focus on. I'm kind of so I'm a little bit torn, because part of me is like, okay, like I really should be focusing, like when I have free time, I should be working on making more videos and making more videos about the indicators, and limit the work on the indicators to bug fixes and things that you guys are requesting. Which might mean that I don't really do a whole lot of programming. But then I'm like, well, but I need to program something. Okay, so should the program something be start learning more about Rust and building your own platform? Or is it just like go in and do leet code things? I've kind of thought, well, okay, if I'm the greatest NinjaTrader programmer ever, maybe I need to do some things so that I can really actively prove that all the time, because I don't necessarily like you know, I have to look up most of the functions. I stumble around. That's kind of always been my style of doing things. And maybe I should be going through and memorizing function names and memorizing things. Or maybe more broadly, I just need to like level up my C# programming skills and like be doing leet code hard problems or something like that, you know, so that I can come in here on stream and be like, look, I'm the greatest programmer. Let's do elite code hard, you know, something like that. I don't know. Well, I think that the other thing though is that the next thing that was on our list was some backtesting stuff. So I think next week, if we do any programming during the stream, it will be backtesting stuff. Daybot asks, Seth, do you ever study or test any models around standard deviation? The bell curve has always intrigued me. Yes. Well, so the thing that's always interested me, so and I don't really have an indicator for this. Well, maybe I do, and I just don't remember what it's called. But okay, so like standard deviation, when you think about standard deviation, there's an indicator that uses standard deviation, and it is the Bollinger Bands, right? The Bollinger Bands is basically saying like, what is the standard deviation of price movement, and then you know, creating bands so that presumably when it goes outside of the bands, that is, you know, something that is outside the norm, right? That like should only happen like 10-20% of the time that it goes outside the bands. I actually think, based on my testing, that it happens more often. And why is that? Well, because standard deviation within that context is flawed. Bollinger Bands are a misapplication of standard deviation. And why is that? Because standard deviation only applies to a stationary series, right? Like if you have something and it has like a limited range of values and they're all with, you know, but when you have something that can just keep going up and up and up and up and it's moving around, that sort of stuff doesn't really apply, right? You have to apply the standard deviation to something that is more of a stationary series. So the way that I always took it for that was instead, okay, what is the range of the bar? And was the range of that individual bar outside of the standard deviation? Okay, that's like a more reasonable application of it. Now, within the day trading context, I think you kind of got to be a little bit wary about using it because again, like in day trading, market's just really efficient, okay, and really random. So anything that's really just based on a single price series is not really going to work very well. And yeah, you go and you backtest on that, it's not going to work very well. But something that I've always found works very well on high time frame is doing that. It is you come in and you say, okay, what is the range of the bar, you know, and is the range of this bar outside the standard deviation for bar ranges? And of course, you do kind of like have a moving average, like, okay, the range of these bars is higher over here, and so that is going to go up and everything, right? And how long do you make that period? And one of the things that I did very, very, very early on in my career, when I was still like using Thinkorswim, is Thinkorswim has like these heat map things where you can come in and you can say, okay, like this row is a 1 minute, this row is a 2 minute, you know, and so you can show all of the different periods in one indicator, right? And what I found was that when you get a big spike in the volatility, essentially, that is really well outside of the standard deviation, that's usually the end of it. Like you will get a huge spike in volatility in markets, everybody will freak out, and once like that whole section down there is red hot looking, that's when you buy it and it flips around. And I think that you would have had some problems with it during COVID, But overall, I think you'd still be making money from that strategy. So that's one look or approach to it. By the way, we did make a new high there. I don't know if it was as spectacular as I was hoping it to be, but I think that I can still just I took profits on one contract, so I'm a little bit happier about the overall profit I'm making. I would prefer it to be more like 500, but that's I think I can continue to hold this and see. I'm still kind of curious if we're able to get to yesterday's overnight high, which would be 09. So there's still plenty of room to move today. Let's see here. I posted the way that I look at the fair value gap. Bar closes and next opens with a gap that does not get filled at all. Check. Oh, I think I might know what you were referring to. Let me go and find the picture here. You posted that in the private one in the interest rates channel. No. That's something else. Oh, I'm not sure I see it. Have you ever heard of Gamma GEX? Not too sure. While we're on this subject, you know, so think of it like this, right? If you have a range, right? And you take a position within the range, right? Then if your target is smaller than the range and your stop is larger than the range, then you make money, right? The big caveat to that, though, is where within the range do you get your entry, right? Like, let me try it again. If I'm buying, right, and I get the middle, then that means that my target has to be less than half of that range. So like normally this would be like 4 ticks. This would be like 4 ticks in the treasuries. So that means that if I got average execution, that my target has to be two ticks, and maybe my stop can be 4 over here, right? It seems like a setup for some sort of mathematical indicator sort of a thing, but I'm not sure where to take it from there. But I guess the key there is, I think one of the big problems that I have, or rather things that I haven't done research on, that I need to find something about is better entry. I'm pretty good at catching it, like there's something happening and you get in right there and the flows catch you. But when you don't do that and you know you catch some heat, and how do you reduce that heat? Maybe it is waiting for a pullback in some form, or how do you sort those probabilities out? Because then if you wait for the pullback and then there's going to be the times where you miss it, and are those worth it or not worth it? Right. Okay, now check. Activities. Okay. I don't know if this is the best rep out. So I think what you're saying is there's a fair value. Let me try it with a different color. There's a fair value gap here, and it gets filled, and when it gets filled, it immediately leaves a fair value gap behind it on the other side. Is that what you're talking about? Closes and next opens with a gap that doesn't get filled at all. That's what I think you're saying, right? Like, I can find you one. At least yesterday, I remember seeing some that were like exactly like that. I don't know. That one is kind of like that. Like there was a gap here. It created a gap when it cleared those, but then that one came back. But I've seen somewhere it's like the gap on this side exactly matches the gap on this side, and it's just there's a blue one over here and there's a red one over here. So it's like, okay. Like the liquidity was not healed and they just slipped through it both ways. This one is maybe an example, even though it's not exactly, but it's like they just keep forming gaps in this spot. So it's like this whole range is kind of slippery. You know what I mean? Yeah, we're talking about the fair value gap from, well, at least what ICT calls a fair value gap. Yeah. So the idea here was to give you a little bit more background. The idea here was like, okay, we've got like our parts. We would like to add things to maybe attract a larger audience. I don't believe in fair value gap, but there are a lot of people that do. So can I make like the best fair value gap indicator that there is to attract those guys in? And well, there are indicators like this on TradingView, so I don't know if it's like the best that there is, but there is some nice things about it. And the backtesting side of it, there's some real advantages to it for the backtesting side of it. But kind of what happened was when I got it in and there was so many fair value gaps that I was kind of like, well, I don't really know where you can take it from here. You know? I do kind of wonder, can you do this thing where like a number of fair value gaps are made within a certain time period? Like let's say number of fair value gaps per hour. And does that tell you something? Well, that would be a really good indication of a slippery market, which is definitely something that we pay attention to in order flow, but usually because I don't like to trade a slippery market, right? So anyways, yeah, so I'm kind of presenting it to you guys as like, okay, so like what can I stick on this, or what kind of back tests can we do with this that would excite you guys enough to, you know, tell all your friends to go buy it and things like that. But at the moment, it's kind of just making me feel like not interested in it. You know what it is? Okay, so like there was this other experience that I had. I should give you some context on this. Just, I know this is like Seth's therapy session, but there was something else that happened yesterday that's kind of coloring my thinking on these things. So there was this thread where a guy was asking about like, well, how do you find a good educator when people can just fake their trading results? Like how do you see that their results are actually fake? Or how do you see that their results are just random luck, right? And you know the answer that I'm gonna give, right? Well, don't look for authority. It's a logical fallacy that you should follow somebody that has authority. I mean, it's a heuristic that humans rely on very, very heavily, and in most contexts, it works really, really well. Find somebody that's already doing that thing really, really well, and just copy them. That strategy does not work well in a competitive endeavor, especially one as competitive as day trading, because if somebody else is doing it, it's a public thing, then it's going to be taken out of the market, and you're probably not going to be able to derive a whole lot of edge from that thing, right? So I say you use empirical evidence. And somebody came in and was like pushed back on that in a way that really surprised me. like I had never seen somebody come in and say like, oh, that's so dead wrong. Now I think that to some extent they were like making an argument, like kind of a separate argument that I think sidesteps a lot of like what actually is empirical evidence, right? Because the reality is most backtests suck, right? Like if you're on the internet and or Reddit and somebody posts a backtest, hey, look, here's a backtest. I think these are really promising results. What do you think of them? well, it's almost certainly the case that it's a bad backtest. That there's, somehow they're cheating the simulator. They don't realize it. They are not using a large enough data set. There's something about it that it won't translate to live. Like there's just all of these problems with it, right? Well, this is why empirical data is so important, because if they've really given you empirical data, then you have all of the information that you need to try to duplicate their results. So you can program the algorithm yourself, you can run it against multiple data sets, and you can do all of the work to really verify the strategy. And that includes like forward testing it as well, right? So when I say, rely on empirical evidence, I'm not saying like find somebody that has a good looking backtest and then all in on that. No, that just means like that's where you're going to spend your attention. And that's just the first step. Of course, you still do all of the verification and testing processes on that backtest, right? But anyways, so I'm looking through it, and I am, one of the first things I do when somebody like really starts a fight with me like that is like, okay, let's try and see like who they are, what are they thinking, what kind of arguments are they going to try and use so that I can like tailor my comments to that and everything, right? And it turns out that the person that was arguing with me was Adam Grimes. So I don't know if you know Adam Grimes, but like he wrote a very popular technical analysis book. Is it a very popular one? I don't know. He wrote it's like the art and science of technical analysis or something like that, right? And like I noticed that right away. So like I kind of pulled my punches a little bit. I was a little bit like tried to be a little bit cautious at first, and then after I posted it, I thought about it even more, and I'm like, let's walk it back a little bit even more. But man, the way that guy reacted, I really wish that I hadn't pulled it. like he was so arrogant. It was really startling to me. I was like, because what I thought, what I was saying at the first was like, well, of course you believe that because your work is not empirically backed, right? But I had seen that there was a book about like the beginning of quantitative analysis. Like I saw that on Amazon. I went and I found that book. That's actually not a book. It's just like a 5-page thing or something like that. And so I don't really know what degree of quantitative research he's actually done. I went and I downloaded his book and thumbed through his book. And what I saw in the book was the very kind of technical analysis that I despise. It's just, people making general comments about the markets, probably based on things that they learned from momentum traders, but that they don't really truly understand themselves. And I just, man, like the deeper into it that I got, the more that I was like, no, actually, I just don't like this guy. Like, forget about like maybe if he did have empirical research, I still would like not want to have anything to do with him because arrogance was just like so insane. And it really seemed to me that it was like he had built his whole thing on like, oh, well, I've been a profitable trader in the past and I've verified and other people can't. So you should listen to me. And that's his whole stick. And he doesn't like people saying you should rely on empirical evidence because he doesn't have that. He hasn't published. He said that he does, but when I went and I looked at the book and everything, I did not see that in there. I was looking to see, charts and studies cited. And no, there's nothing in there that you would find in a peer-reviewed journal, And it kind of motivated me, to be honest. Like one of the things that he did that irked me, like let's not say irked me. One of the things they did that pissed me off was he was like, well, you're selling, a software package, so of course you think that because you have every incentive to think that so that you can publish your indicator package, right? that kind of made me mad, because it's like, no. The reason I made the indicator package was because I did all of the research, and I saw that this was the way to go, and I saw that the retail tools for it were inadequate for retail traders to actually do the research. So I made them for myself, and then the people on my stream wanted them too, so I made them available. And then it's just kind of like the demand is there, and it just, I don't even feel like when I do these things, so almost everything with my channel, I kind of feel like I've been along for the ride. Like, I'm just going along, I'm just following where the road goes. And I'm not necessarily making any, like, super, insane strategic decisions to change the world or anything. But then at the same time, I do want to be disruptive. Like, I want to come in and make, algorithm that will mess up the prop firms and all of those things. But then when I think about it, what we're doing with the indicator package is actually the most disruptive thing that I think we could do. Because the technical analysis price action cult, it has a much larger hold on the retail trading community than the prop firm cult does. The prop firm cult is a little bit more irritating, but it's really the price action thing is the one that I really think has a hold on people, and quite frankly, the one that I think that we have the best opportunity to disrupt. I've got the skills to do it, and I think that you disrupt it, it can really change things. Like, the whole thing here is people have looked at the tools that are there, and every platform has 1 minute charts or whatever. And so these educators and stuff, they have basically zeroed in on, everybody has charts. So I'm going to show you how to analyze the charts and then sell a trading course off of that. That's the way that they've decided to make money. Problem is that the things that they're teaching are nonsense. Why? Well, because there's not a whole lot you can glean from just looking at a 1 minute chart of one asset. From a quantitative perspective, there's not a whole lot. You build a robot that trades off of that information. I've never been able to find anything. Somebody came in yesterday, they were like, oh, I totally have that. And then they were like, see ya, bye. Disappeared. So like, okay, maybe you're just messing with us. I've never been shown that backtest though, that you can do a one time price series and really gain a strong edge from it. Right? So like, by coming in and providing people the tools, I really think it disrupts that. I really think that there is a point at which when we really have the full pipeline built, because we're still building the pipeline, right? Right now, we've got something that collects the data, and it's doing a really great job of that. And we can do backtesting. So now we're doing a little bit of backtesting to understand some of these things, maybe make some robots that we'd always wanted to do. But then taking all of the data and feeding it into artificial intelligence, right? I think that there's a point at which that analysis becomes so powerful that the price action people won't be able to ignore it, right? And it will completely undermine their entire approach to the markets. So it motivates me to be like, this is a place where I can disrupt. We've got a good thing going here. I just got to keep following it, because I can see, okay, there is like a structural reason why it is the way that it is. People don't want to have to pay for additional stuff. People want it being told, oh, you can do just fine with just the tools that come with every platform. That's an attractive message to people. And then you just make money on the education bit of it. And people will buy the education even if most of the people fail from that education, right? But if you get to the point where like you know, that there's so much edge in that sort of thing, and there's so much empirical evidence for its efficacy that people can't ignore it, and you make it available to everybody, then it comes to a point where like you have to be able to be looking at those things and using those things to be even reasonably competitive. And that's where the disruption comes from. So that's why I'm kind of sitting here like pointing this fair value gap thing to you guys and being like, okay, so here's what I got. Do you want to make the case that I should spend some more time on it? Let's see here. So a couple of comments after that big long monologue that I did here. I still don't inherently see the problem with playing the FVG space strategy. It just needs filtration and tight risk management. Well, but I do. Because, so, I actually, I think it still kind of puts it into the unknown area, actually. So like, an unfiltered fair value gap, I think I can pretty conclusively say is useless, right? It happens so often that what's really happening is people will say, hey, look, there was a fair value gap right here. There's a fair value gap right here. And look, they came right to it and then they bounced off of it, right? So that's the super, super great trade. Yeah, but what about this fair value gap and this one and this one, this one and this one and this one and this one and this one, right? It's a selection bias problem. Okay, so if I come in and I filter it, and I do have one filter on it, the gap size. So if I come in and I tell it, you have to gap at least a point in the S&P 500. Okay, that gets rid of a lot of them. That's probably still too many. 8. Let's say that they get 8 of them. Well, okay. I don't know. Can you build something with that? Maybe. But then it's unknown. What would the strategy actually be? You know, because there's the silver bullet thing. We already did that one. We know how that one works. With letting winners run, that might be part of it. There is this thing where the what is it, the silver bullet is kind of like a reversal strategy. That's true. Daybot says, I would give ICT big props for his creativity in building his following. It's impressive that he could pull it off on somebody for so long. Yeah, I don't know. Like, one of the things that I kind of wonder though is like how much of it is actually organic, like, because I just cannot understand people being attracted and interested in watching him. He's so narcissistic, it's nauseating. Is there really a large group of people out there that are just really attracted to narcissistic people? Maybe that's the case, and I just am, you know, because I'm ADHD, I'm not prone to that effect and I don't see it, maybe. But I also wonder if maybe he was, you know, he's using bots and other sorts of things to kind of game the YouTube algorithm to become popular instead. And I would put, you know, and this is maybe one of the motivating factors behind me wanting to create an affiliate program for our indicators, is that it seemed like a part of his success was the way that his followers went around and just spammed the crap out of everybody about it, you know? What if people were doing that about things that are like empirically backed, right? Okay, going back, Trading Academy, I studied ICT, and the first fair value gap after 930 behaves aggressively. Okay, so after 9:30 Eastern time on the S&P 500, that's like actually super late. That's a late time, but we could program that. I don't think it would take us that long to program that either, actually. It's funny, to be honest with you. All I know is your channel is one of the most useful channels out there. Thank you so much. I try really hard, and I'm really proud of the content that we've made. And I do feel that it's slept on, but I don't think that it will always be that way. Common sense logic almost mandates that if someone found a significant proof in statistical edge, he would never show. Yeah. Well, no, I mean, the funny thing about it, Daybot, is that I have seen people that have found significant edges and, you know, they share it and it blows it, right? Like, it's a naive. So a retail trader absolutely can find an edge and then share it and ruin the edge. I've seen that happen before. And like the whole thing with ICT, the evidence that we have from the ICT thing suggests that there was a time period where it worked really well. But the reason that it worked really well was probably because there was so many people out there trading it. And there was a certain point at which there was so many people trading it that then it became a loser every time. Okay, Trades by Brandon asks, what's the best source to learn about level 2? Well, so I would call it market depth. And I have an order flow video series. So if you watch the order flow video series, that goes into all of the information about the things that you can learn from that. Because, you know, there's a lot of data that you're adding in the level 2. What are some of the things about it that actually matter? And we get into that. We talk about it. So you just go to my main channel page and it's, you know, one of the playlists a little bit down the page, order flow video series, and it's about 7 videos. You watch all 7 of those videos, you'll know more about order flow than all the other traders that haven't watched that series. Also pedantic. I was maybe talking about myself. Messaging is everything. We elect the president off of it. Whether you think that ICT is pedantic? Oh, okay. I don't know. I just can't get over how narcissistic he is, and like everything that he says is just like, gosh, how does anybody stand listening to this? I just don't get it. I just don't get it. That's why, again, like, I really genuinely wonder if his popularity is entirely manufactured. But, I don't know. I think that if I'm going to spend some time doing some backtesting things, I don't know if I really want to mess with this one. So going back, you had this one first fair value gap that occurs after 9:30. So, that one is actually like really easy to program. Like so the reason that I was kind of interested in this whole bit here is that it's like, okay, like there's the fair value gap, but like when you come back to it, and especially when there's like multiple ones and all that, how do you deal with that? So the setup that Trading Academy is suggesting kind of sidesteps that problem by just saying, we only care about one fair value gap, and that is the first one created after 9:30. So like, well, actually, we can totally do it. And of course, there's still the problem of, do you filter it? But if it is 1, so we have maximum fair value gaps, and we come in here. And are we saying after 9:30 Eastern time, which would be after 11:30 my time. So, oh, I need to change the crosshair. So after this. Okay. So the first fair value gap that is created, they're kind of touching some fair value gaps, but the first one that is created is this one right here at 60.57, and then you know, we never get back to it, so it doesn't matter on that thing. You do it on TLT. Well, you can do it on. I don't get TLT on this chart though. You just use the trading view indicators for it on TLT. Or we could do it on CN, I guess. So like, here's just an example. There's the fair value gap that it forms off of the news. Eventually it gets back to it later in the day. I don't know where you want to go with it from there. Spent years studying smart money concepts when all you need is squiggly lines for yeah. Like again, I honestly, I kind of wonder if the fair value gap was chosen because of its ubiquity, like because it happens all over the place and people might not necessarily see that they're all over the place. And so I can just point it out. I can be like, look, here's a fair value. I just find the one fair value gap that matters and then hide all of the rest of them and go, look, see, this matters. I think it's exploiting the selection bias in people. You basically lock them into a selection bias. In the same way that they do with a lot of like key levels that people use. Yeah, and the FVG that matters is, of course, any one of the ones that he makes, or the one that worked that day that we can point out at, after the fact. So I got two problems here. Like one problem is, okay, I don't really feel a whole lot of motivation to do something into it. Let's see what you guys think of it. But then the other issue is, well, the thing that you guys are pointing out, you don't need me for that. You can program. You guys, you're watching this stream, you go and watch some of my videos on NinjaTrader programming. You will know how to program that strategy. I don't really feel like that I need to spend time on it to show you guys how to do that one, right? Like I want to program something that's like, not everybody can do. to make the creating my own indicator on it, worthwhile. Certainly looks cooler on a ES chart. This might be another reason why they also some charts they have limitations on it that if it takes longer than 30 minutes they cut it off there, something like that. It's crazy back. It's just the Stream Beats by Harris Heller. Like the most popular royalty-free thing, yeah. People compliment the music so much, and I'm just like, I made the most milquetoast choice you could possibly make. If I could play any music that I wanted, then we'd play very different stuff. First world problems. Yeah. So now I'm kind of thinking like, oh, we could do some programming. Well, let's do the other things. The other back tests that I'm more interested in. Should we do them right now? I mean, this market has been interesting. Although it is starting to get less interesting here in ZN. Like, well, they touched 07 and they've pulled back. Are they really going to be able to make another new high here today? I think that they might be able to, but maybe not before our session ends. I guess there's enough of a chance for me to possibly sit, especially since there's enough of a chance that it comes all the way back to 01.5 that, you know, well, there's an easy solution to this, which is to take the hole that I see forming here. Then I don't have to worry about if it pulls back. Okay. Would still want to monitor it, though. Let me close this. New script editor. Were the markets what got you into coding? No, I was a programmer before. I was about to graduate when the financial crisis happened and I got interested in markets. Originally, I got into coding because I wanted to make video games. I guess I could still go and make a video game. I don't know. Go and get into Unreal Engine and make the shooter game I've always wanted to do or something like that. I don't know. I kind of feel like that my taste in video games has become so different from what is like out there and popular and everything. I don't know if I would be able to design a popular game now. Okay, strategies. And then I have one that is called, what is it? Random or something like that. Random trade. Okay, so I always feel like I need to make a new folder when I'm doing these things, but like, okay. So new strategy. No, not new strategy. New folder. New folder. Optimize. And under that, I'm going to make another folder called entry. Okay. New strategy. Okay, so have a good one. Yeah, I'll see you later. So this strategy right here, the random trade one, it picks a random time and a random direction, and it just takes a trade. So what if we take that same setup and we can run this one and then we can run this one and we can give them the same seeds. So we can like basically duplicate these random trades on these random trades. And we can come in and we can say, okay, so I have enter long here, right? But what if I said instead enter long limit just checking all of the different options here. Limit close of, okay, let's say pullback price. Okay, first of all, we'll make a new property here. Ninja script property public int pullback get set enter long limit close of 0 minus pullback comma and long limits. And meanwhile, for the short, it'll be the same thing, but it'll be less the pullback. Oh, and it's pullback times tick size. Ba-da-bam. Oh, we called it pullback, so we can't call this pullback. Pullback ticks. I actually also, I think we need to do this. Public will use pullback. Yes. If use pullback else same here. If use pullback having a little bit of issues editing there because I want to use my Helix editor shortcuts. Okay, well, one last thing. Pullback ticks equals 1. New strategy analyzer. Optimization run. Optimize entry pullback. Use pullback. Optimize. Reward factor 1. Oh, do we have it? Do I have it like that? Let's see here. Oh, I thought that I had one that was just like random trade and then like, that was time entry. Well, okay. Let's just do it with the way that it is first, and we can come back to it, change it if we find that's just too much. So it's just random. Okay, so the seed is the thing that really has to be changed. So from 1 to 1,000. And pullback ticks. What are we going to do it on? You want to do it on the S&P 500, I guess? So if we're going to do it on the S&P 500, let's make it like from, well, let's start with 1 to 10. Sure. Yeah, let's just start with that. I'm going to exclude the commissions for now, just because it makes it a little bit easier. 2019, 5 years, run. Oh, select the instrument. Yes. Is that 20 iterations? That might be too many. For 5 years, that might be too many. I'm gonna abort. Abort! Let's change it a little bit. Seed of 100. Just do 100 iterations on it. Also, we need to I don't have it built into that one, so let's go and add it. Let's see here. Advanced base strat, and there's this like save history. That in configure, yeah. And then man, this base strategy got super complicated. I should have like a base one and then an advanced base one. And then I could have just inherited from the base one. Yeah, but whatever. Save history. How about I give you the title of a person who discussed it on the sweep strategy? Sure. Save history false. Wait, that's still 20,000 iterations. So what's wrong? What did I not fix? Oh, it's still doing it by 1,000. 4,000 iterations. Okay, 40,000. For 2,000 iterations. Okay, 20,000. That's the problem. Actually progressing along pretty nicely. I'll move it over here so we're not blocking the treasuries. It kind of looks like I was a smart decision for me to get out where I did it, the 04 area. And that hole that was formed because we have pushed a little bit lower and deltas and everything are kind of going sideways. It's a French video, huh? This one right here. 2 hours. Oh boy. Okay, well, I'll watch it. I'll watch it later today, maybe. It looks like they're talking about, you know, like maybe they'll be talking about serious stuff, but we'll see. Okay, results. One of the things I think is really fun about this is like, okay, it is a purely random strategy. You gotta understand. It is doing it. This is purely random. You can get a purely random one to give you pretty good looking results. Like, man, 57% win rate. Okay. Well, what we really want to do is we want to say optimization graph. Net profit seed is going to be 1. So there you can see this by the seed, how much they make or lose based on the seed is kind of a little bit random, but there's you know, you notice that for each seed there are 10 different ones. Okay, so then pullback tips is parameter 2, and when we come in here, which side is which? Yeah. That's kind of what I thought. So do you see this distribution? So what it's really saying is if you wait for a pullback, you end up taking less trades, and so the overall distribution of the strategy is just smaller. The amount that you can lose is smaller, but the amount that you can make is smaller. And that's just from only using a pullback. And the larger that pullback is, now the bit that was about the use the pullback, the optimize, am I not allowed to display the difference between those, huh? Let's change it a little bit. That'll probably help us see it a little bit better. Help us see if there's a difference between... Oh, did I get rid of the wrong property? Kind of some convoluted logic I'm using there, but you know, it's the fastest thing. Run it again. They give you less iterations too, so there's some iterations that were basically copies. There we go. Oh, no. I screwed it up. Min needs to be 0. Oh. Isn't that right? Hold on a second. That can't be right. There's something wrong. Hold on. We're not done here. That was a significant oversight I just had there. So formatting here. What happened? So what happened was that the ones where I had, where I was using a limit order, it was not using, it was not using risk management. It wasn't taking stops and targets, essentially. So that's why when you look at this one, that was the market order where it did use it, the distribution was so much smaller. This kind of got back into this thing that I was saying earlier that was like, should we just use it to should we not have it use stops and targets and just tell it to stay in for a certain amount of time? Well, time, there's some advantages to using time, but like what we're doing is kind of random anyways, so I don't know if it matters. We're testing if there's an advantage to waiting for a pullback. Basically, it gets a signal. The signal is random, but instead of hitting in with a market order right away, it instead puts a limit order a certain number of ticks away from the current price. And how does that change things? Okay, that's a little bit better. Oh, that's more interesting. I'm not quite sure what I think about that. So the ones that worked best were the ones that were just using a market order, right? No, wait, that also does not make sense. Am I reading this right? 0. Because it's saying that the most profitable one was one where it waited for a pullback. But that's not what the graph is showing me. Oh, because I see. We want max net profit, not max profit. What's the implication for the Fed now that inflation is stuck where it is? Well, I think that they do another rate cut next week, probably. And I don't know if there's really implications for it beyond that. Where it gets kind of iffy is like maybe March, you know? Like, are we able to continue cutting into March? Okay, now I should see that the ones with the pullback is 0. Yes, okay. So it's saying that the ones that make the most money is market orders. And that if you wait for a few ticks pullback, like 1 or 2 tick pullback, that for some reason those do really poorly. So it's like if you wait for it to come back 2 ticks on you from that point, that kind of is bad. So it kind of supports the idea of when you get your signal, like, just do it then, right? The results of that are a little bit wonky, though. That is not what I thought it would be. I'm afraid to erase these pair day VWAP ones. I'll save the last one that we did. We are going to go further. Ninja script property. Public pool use set. Get set. Ninja script property. Public pool use time exit. Get set. Ninja script property. Public int bars exit. Get set. Yeah. Use that stop target. I'm just hearing stuff about Bank of Canada thing coming up in a second. Not that their market really moved on that stuff. Take time, today's exit. Today's exit time equals today's trade time dot add minutes. What did we call it? Let's call it exit minutes. Exit minutes. Exit minutes equals 30. Use set stop targets use time exit by default. If time equals today's exit time, exit long, exit short. So the way that we would verify that this is working correctly is that when we run the back test, the bars in trade per trade should just be 30 minutes. Well, you know what? So another thing is, I thought, hey, maybe the treasuries could bust yesterday's highs. But that doesn't look like a very strong possibility anymore. We've almost come back to the price that we were at before the CPI news. So the CPI doesn't seem to be holding back the guys that want to go short the treasuries because of inflation concerns and stronger dollar and whatnot. Oh no, that's interesting. So the results are similar, but like not as extreme. So you get this interesting bit here where like, especially if I come into like analysis and do this open strategy analyzer tab. Save history. Wow. They got lucky. That really got lucky on that thing. But like when I go to like MFE and stuff, like yeah, you get some that are like winners and stuff like that. Whereas with the way that we did it before, you know, they're going to be cut off at a certain spot. So we're able to see like certain things like, okay, so if I allow, so can I do it this way? Let's see. Back to oh yeah, this tab right here.
Block cell.
Optimization graph. Can I graph average MAE MFE? Yes, I can. Oh, hold on. Wait a second. Nuh-uh. That can't be right. Why? So I'm sitting here trying to figure out if there's something about the way that my test is set up that is causing that to happen. I'm really wigging out here by this result that I just got. I'm trying to figure out how that's possible. So what it's telling me is that the net profit that you make, you know, that waiting for a pullback doesn't necessarily change the net profit that you make. But what it does seem to do is the more of a pullback that you wait for to get into your trades, the more volatility that it exposes you to afterwards. So like if I wait for it to come back on me 10 ticks, then that means that there's enough, you know, the ones that actually get filled that means there's enough volatility in the market for that, and therefore the MFE and MAE that I get after that is greater as a result as well. Because the MFE and the MAE are equal, it doesn't change the net profit that you get. If I switch this back around to doing this, does it still show me that? Oh, it shouldn't show me that, because then the MAE and MFE should just be like set numbers, right? So let's just do a sanity check here. Also on this one, we had the trade data on. Average bars in trade 30, so it is working correctly. It's only allowing you to stay in the trade for 30 minutes. Wonder what would happen if I changed it to like an hour. That's also something to test here in a second. It actually still increases even with the set targets, but there's just like a limit to it. Now that's really interesting, because that also is kind of suggesting to me that, like, if you have a set stop, and maybe the stop that I have set there is too close, it's 20 ticks. But it's kind of saying if you have a set stop, the market order is worse for you. Dude, that result, it is wild. Come back. Use set stop targets. Use time exit. Yeah. The larger of a pullback you wait for, the more volatility it exposes you to. I mean, I guess it's a little bit consoling, because like you're in a situation and you're like, well, should I, wait for the pullback, or should I just get in it now? And I guess it's kind of saying that, like, if you wait for the pullback, it doesn't necessarily hurt you, because you do get less trades. There are going to be some that you miss, but the more of a pullback that you're waiting for, the more volatility you're going to get afterwards, and the volatility can potentially make up for it. Assuming that you actually had like a real edge. I don't know, man. That's really crazy. Because it like almost goes up in steps. Like it has a very clear impact on your MFE, MAE. It increases your MAE. It increases your MFE. Across the board, like extremely consistently. I'm like so much so that I'm just really skeptical of the results. I don't know. Yeah, see, now this side, what this is saying is that you take more trades overall. So your overall profit is higher, but then your overall losses can be higher as well. That's kind of cool. And it makes you think like, okay, so like, we're saying you get an entry here. If it comes down, you get into it. Ooh, hey. Where is this? Pullback ticks 0 to 10. No. Negative 10 to 10. What if you don't wait for a pullback? What if you enter it higher? Well, if I enter long limit on that won't work. It won't work. You need to tell it like enter stop limit. Like I get my signal and then I say I wait and let it, you know, if it goes up more, then I get in. What that does. That would be another interesting kind of like way to test the setup, but does KT's book talk about this? I'm not. I just. I'm kind of perplexed because on one hand, I'm not sure if I completely understand why it happens. I mean, I guess I have a theory. I mentioned a theory, but I'm also like just not sure like what the implications of that are. Like, what do I do with that? Like, can I use that to my advantage? But I mean, it's like such a clear result that it's got to be structural. Okay, yeah, it doesn't like the negative one. Probably because it's like entering a long limit up above where it is, and so it's taking just as many trades, but like maybe catching more slippage. So I'd have to change it to be like, if it's negative, make it a long limit stop or something like that. Maybe something for another day. I'm kind of thinking this is a good stopping place. That was one of the most interesting and useful backtests we've done in a while. You guys aren't saying anything either. That's also throwing me for a loop a little bit, but man, that is so good. Well, I got a few minutes. I'm just gonna put this again. When it's the random trade time. Definitely not the most graceful way of doing this, but okay, well, before we go, let's just talk about what we had happen here in the treasuries. So when we come back over here and we look at charts like in the ZN, so here was the original news. We had a big move up. It was looking really good, and it's come back. When I come over and I look at things, this seems to match with the Japanese yen really, really well. Japanese yen moved up. They were like, nah, we still want to be short the yen, and so it came back. So it kind of seems to me, well, so at the same time, let's see here. What did the S&P 500 do? The S&P 500 was just all up and riding the stops all the way. And what did the spread do? So this is a spread between ES and NQ. So the spread moving down means that the NASDAQ and tech stocks are outperforming. So I think what happened here was traders said, oh yeah, let's put the carry trade back on. And the currency correlation canceled out the, hey, interest rates are going to be lower sort of a thing. So that's why it's come all the way back. I wonder if we were able to look at the, well, we are able to look at the short-term bonds, but I'm a little bit too lazy and got to get going to go in and say like what should it have been. But I kind of wonder if, you know, the chances of a rate cut next week have increased, even though the treasuries are back where they were. And that is a result of that they decided to put the carry trade on. That could be a key insight that might help us in the flows, especially early next year. So I think we want to remember that one. And we want to remember that backtest, because that backtest showed us something. The like waiting for a pullback didn't necessarily help the profits really necessarily, as much as it did you take less trades. But it does affect the MFE-MAE. That, like, on those, you take less trades, but the trades that you do take have more volatility by waiting for the pullback. It kind of makes sense, but I'm still surprised by it. And more so, I'm kind of wondering, like, this seems like something that we can use to our advantage. I'm just not sure how. Think about it. I gotta get going, guys. I will see you tomorrow.